Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same. Cause that's what.
All right, guys. Happy Friday. May, welcome. How are you?
Hey, happy holidays, everyone.
All right. We got some news this morning, May, to talk about, and we're not. I don't think today, or at least not in this live stream, I don't want to do a super deep dive into the ATM, because I know you, just like me, are still reading through it. But I thought maybe we could just do like an initial, what is a forward contract? Why have we never seen one before? Why are we seeing it now in this ATM?
Well, I mean, the forward contract, that one, okay, so I'll try to mix in as much as is easy to read through the two documents that are prospectus. But the forward contract is just a forward sale of the securities. You do have a couple missing pieces in these two filings, and I think that's because these documents are pre-finalization of everything. You know, so sometimes you put out an initial prospectus and then a final prospectus. This particular forward equity contract is a couple things. Let's do it piece by piece, because
let's do explain like we're 5 years old for folks. What is a forward contract? Just in a generality, it's basically an agreement privately negotiated between two parties where they agree on a price of a security, right? Because AMC knows there's volatility, and the other party, Goldman Sachs International, knows there's volatility. They agree on a price at which they're going to, at some future date, exchange shares. Is that a fair ELI 5 description?
Yeah, you can think of it as a call contract in the future, where the issuer is selling shares and the other side, which in this case happens to be Goldman Sachs, is gonna buy the shares at that price.
And AMC, just to get the very basics, and then I want to hear your more, you know way more about this than me, but AMC, from their perspective as the seller of the shares, they, I'm assuming, want to be guaranteed a certain price, and they know that there's going to be volatility, but they're trying to raise money, you know, to get through Q4, Q1, have money for CapEx. They want to kind of be guaranteed a price, right?
Yeah.
And
so
the other side of the party is hoping that, okay, we'll agree to your price, but we're hoping that we can go in and buy it cheaper, or is it sell it cheaper? They have a profit motive on their side too, right? Goldman Sachs.
A little bit, but there's a couple different ways that they can think about it from their perspective. So
all right,
the most
tell us what we need to know, May.
The more common way that these are used, even though it's really not common, to be honest, but the ways that you'll typically see this is if you know there's going to be, and I'm going to say this word, but I need everyone to not freak out, okay? Because this is not going to be the case for AMC. But the more common use is if you know that there's some kind of transaction happening in the future, and it's there's some kind of probability associated with the transaction that's fairly high, then you would go ahead and offer the shares in a forward contract, because what you're doing is basically going ahead and getting the money now for something that you know to be true in the future. Now, that's not what's going on here. What's going on here is actually kind of a different form of clever. And that form of clever is that you're missing one kind of two major pieces in order to really understand that clever. So, but you have the same concept where you are in fact selling shares at a higher price, given that the stock is down 10-something% today. That price, it basically turns it into a secondary for something like AMC, who isn't necessarily having some transaction on the other side of it. So it turns it into a secondary without the dilution all happening well, the dilution is going to happen whether you like it or not, but the manner of which the dilution and the price at which that dilution has to happen can be kind of locked in over a period of time. So let me actually back that out a bit. Okay.
Okay.
So so if you, in the more common case, if you knew that a deal was going to be done at $5.20, I'll use some of the language in the document to help people read it when they do go through the two pieces of these. The two documents go together that were filed on November the 6th. If you knew that a transaction was going to be done at a premium $5.20, then you would go ahead. But from now until $5.20, it was just going to step itself up there. Then you would go ahead and offer the shares at $5.20, collect that money now, and then give them shares later on at that date, whatever it is, right? And if you go all the way down to the end of the first document, which is the 424B, you'll see that they pay a banking fee associated with making the contract happen. Now, in the contract, in that document at the very, very bottom, I believe of 424B, there's like a blue page on page 63 of 424B. They're using hypothetically $4.88 is what they did it at. The stocks shifted around since then. This number, by the way, and this is where I think anyone going through these documents is going to get very confused. Even anything that we're saying here is not for certain.
Right. We're still reading through the document ourselves, guys. We're just trying to get an initial conversation, get your questions. I'll have a video later. Maybe we'll do a more of a wrap up on this on Sunday, but sorry to interrupt you.
So no problem at all.
I just want to be clear, like we're still reading through this too.
Yeah. What I would say is that I got a chance to review both documents pretty quickly. But again, it's a real cursory kind of look in my opinion, because these documents are a little complicated. So switching gears a little bit, so that we can map any description of forwards that I'm doing to this, because forward equity. So this is a forward equity agreement. They're calling it a forward equity hedge agreement, which I think will make it really confusing for anyone that's going to try to understand what the nature of this transaction is. To the extent that we are so lucky as to have anyone from the IR team at AMC listen to this, which I'm not always convinced that they do that, but let's say they did, I would really love it for them to put out a press release with the information that I believe is somewhat hard to find within the two documents. That would namely be the expiration date of this forward agreement, or if it's not done by an expiration date, but some kind of event related situation, if they could just clarify, that'd be great. But essentially, this forward contract is a sale of a sale in the future of AMC stock now, so that they can have greater certainty on capital raising. So let's get back to what you were saying. We knew from the last earnings call that they were probably going to issue more stock. We knew that they wanted to issue it and make about $250 million. You got to correct me on these numbers just in case I mess up. Don't let me get too far if I say the wrong number. Okay. I think it's around $250 million they're trying to raise. I think they did it at somewhere between 520 and 488. It's a little bit hard to tell. Usually you would have an executed price on the offering, which is why I think that this is the preliminary versus the final filing. And that happens. I mean, it is an 8K, and then you often get a final filing a few days later or something like that. But maybe I'm wrong, because I sometimes get the document numbers a little bit off. Okay. So you have two documents, and actually you don't always have prospectus split into two documents. So that's a little different for me. I don't read a ton of forward contracts, because usually this isn't, I mean, it's not common to use it in this format, but in truth, in the world of investment banking, nothing is common or uncommon. It just is what it is. I would say then it's maybe slightly less common. So you do have to read the two documents together. Of the two documents, the 424B is going to have more of the terms and agreements in it. But for me to make it easy for my life, not have me have all this gray hair, you know what I mean? It would be really lovely if they could put out a press release that follows the format of a more boring style forward agreement, which would give you the price at which the offering was conducted at and any kind of expiration date or trigger points. If it's not an expiration date, that would just clarify it on out. But unambiguously, I think it's page 12 of the filing 424B. I think on page 12 it gives you a use of proceeds, and the use of proceeds is twofold. It is to pay down debt, and it is to fund the AMC Go plan, which we know is capital expenditures for next year. My suspicion is it's probably 50-50 is how they're looking at it, because I think that if you use some to pay down the debt, then you give yourself a little bit of elbow room to add 125 to CapEx, which should give them an ability to do closer to 300 in CapEx next year. That's how I'm thinking about it. But all of that is really rough and off the top of my head after seeing these documents a couple hours ago, so to speak. So that's the best I got.
I want to just interject here for a second, because I'm seeing all sorts of conspiracy stuff out on social media. Adam Aaron's a paid, what do they say? He's a paid agent together with Roaring Kitty and Ryan Cohen to stop any short squeeze. The company doesn't need to raise cash. Why are they doing this? Guys, I literally posted in my Discord 3 weeks ago when AMC was trading around $4, $4.15, that on or before December 15th, there was going to be another ATM. If you listened carefully in that earnings call, if you read the earnings release and the 10Q, and you look at the financial statements, you look at where the box office was back then, where it is right now, not even 1.5 billion for Q4. If you look at Q1 looking weak, it was evident to anybody that's using common sense and math that there was very, very high probability of an offering before the end of this year. And I'm sorry if you're listening to people telling you that they're trying to stop a squeeze. I was expecting this before the price even started running up, no matter what the price was going to be, that there would be an offering in December. And I've left you guys all sorts of direct and indirect hints over the last 3 weeks in videos, and I've been very direct, calling out exact dates in the Discord for the past 3 weeks of what was going to happen. So all of the conspiracy stuff you're hearing out there is just nonsense from people who aren't looking at the financials of the company. They're reading a chart and they got wrong. They were wrong. And so they're looking for excuses, in my opinion.
Yeah.
Because math says this was going to happen.
Yeah, I actually think you're going to get maybe one more shoe that drops before the end of the year, because one of the benefits, given that this is a forward contract between two private parties, they should probably be receiving the cash fairly soon, or some financial flexibility, let's call it. Given that we're right here at year end, and we know that these folks love to do some kind of tax loss selling benefit on the debt, it's possible that they go ahead and try to do something here at the end of the year. But again, this extra cash, like I said, my suspicion, and they're really just gonna have to clarify it out, or we're just gonna know because we see another filing before the end of the year.
I said in my tweet today, May, there's going to be more news. This is not the end of what you're about to hear.
Yeah.
You can take I don't know how many more death threats I want, May, but there's going to be more news.
You guys be nice to each other for holiday.
I want the company to succeed. I want all of the investors to succeed, but they're not out of the woods yet. And there's going to be more news coming, not only in the next couple of weeks, but in the next couple of quarters. I'm just telling you, by looking at the financials and what the company is telling us and taking all emotion out of it, there's going to be more news coming, and you might not like it. So pay attention.
I mean, it definitely says here that the use of proceeds is for partially debt pay down and partially for AMC Go. If the stock stays like this, how they decide to finance this in the next month, for sure, you can tell that these poor bankers haven't had holiday. I mean, hopefully, I think Chinese New Year's is in February, so maybe put your Chinese bankers on it. You might have a shot, but these guys will be working through Christmas. No question about it. As far as it goes. But yeah. So keep in mind though, if you're trying to refinance your debt, having more cash on hand gives you leverage with your debtors to try to talk about what's possible. So for the folks that are trying to figure out like when does AMC turn through this, there is kind of a benefit, and that's part of why Tony and many others were convinced that we'd get a whole series of announcements here in December. So there is a little bit of that. If we were like the key pages for folks to look at, just to kind of keep information together for folks that are trying to review this for their own purposes. Page 12 of the 424B filing will have
that's the one that I have up on the screen here, the offering.
Yeah, that will have the offering terms in there, and slightly above that gives you the use of proceeds. I think, yeah.
Use of proceeds is right here.
Oh, it is right there.
Yeah.
Okay, let me see. Yep. Duh. Okay. So the use of proceeds is right there. And then the things that I would love to see clarified in a press release after everything's said and done, because my suspicion is we might have one more filing associated with this offering. The forwards are a little bit different. I haven't seen that many forwards and how they hit the SEC versus.
I'm still reading through the actual. There's another document, hyperlinks in the bottoms of the 8K. With the agreement with Goldman Sachs, and I'm still reading through that. And once I've had time to digest all of this, I'll try and put together some summary. But I know what you're looking for, and maybe I'll find it in there. I know you're busy with a lot of other stuff, and I appreciate you taking a few minutes.
Yeah, no problem. I ran through it. I didn't see it in there, and I think what the 8K looks like is it looks like it kind of looks like the general like stuff that you must file. Versus this particular one that you have up is the actual terms. So I think they said there's a page in the very, very beginning of this. I think it's actually just on page 1 where they describe why they split. Oh, let me see. The first part. Let's see. Okay. If you go to page 5, it says this document is split into 2 parts.
Yep.
The first part is this prospectus supplement, which describes the specific terms of sale. And then the next sentence is the second part gives more general information. So my suspicion is 424B is going to be more helpful than the 8K. And so between the two, one might be a bigger place to focus, but nonetheless, my cursory reading of this,
I think the 2 parts, is we got the supplement, and then we have the original, the S3 that was filed a year ago.
Oh, okay, yeah.
That's always the second part.
Okay. So what I would say is the things that we're kind of missing are what price was this forward done at? I think it's $5.20, but it's really confusing in the language because I think it's on page 15.
Okay.
It says that the common stock on December 5th, 2024 was $5.20 a share. And given that this was then filed on the next day, it would have been whatever slippage happened between the time that it was signed on the forward contract. Or alternatively, technically they can agree to whatever price they want.
Right.
So it's a little bit hard to say. The back part of the document, I think, uses the closing price or
I was seeing some language, and I don't want to go on the record saying that I'm right on this, but there was some language saying the actual price. Maybe it's I don't know. There was some language about the price will be determined based off the average VWAP, blah 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 blah.
Oh yeah.
So
that's my confusion. I don't know what so we need to finalize price on this for sure. So
I'm going to keep digging through this and see if I can get to that answer. But
okay.
I guess generally what I wanted to cover in this video is why would they do the forward contract?
It would just be to lock in the price. Because the thing is, if they did it a different way, if they did it as an offering, then you get even more, I guess, you could potentially get even more volatility. So
AMC might not be able to get as much money if the price cratered in a in a standard ATM, right?
Yeah, I mean, our history with this is the last time they did this, this thing went from $8 to slightly below 5, right? At one
That's what I
point.
was thinking. Like they're trying to be smarter about this. Like we're
Yeah.
already trading at $5 and they're probably worried, well, shit, if we
Where's
do
this gonna
another
go? Yeah.
ATM and it drops to 238 again, we're not going to get the funding we need. I've had in my mind for the last 3 weeks that they want to raise around $250 million.
Yeah. So yeah,
And
that
this
looks
this
likely.
gets them there if they were able to sign an agreement with Goldman to have Goldman pay them $5 a share.
Yeah. I mean, it was probably done at a slight discount. Now, if Goldman has these shares, they're going to go in the market and hedge out the fact that they own these shares in some way. Okay. In some way. Now, what that way is kind of depends on the missing elements of what we have, which is what was the price that they did it at? Number one. Number two, when do they take ownership of the shares? So that optionality part needs to be clarified. I don't see it in the document, but
The
like I
only
said,
wording that I've come across, May, is it said if we enter into a forward agreement that we expect that the holding period would be resolved on or around the end of the quarter that the holding
oh,
period started.
oh, cool. Okay, so maybe that's it. But if we could get, yeah, that's great. If you find that, that would be awesome to just kind of highlight that.
I remember reading that this morning. These are very complicated documents, and I like to
Yeah,
reread, make sure I got it straight.
this is not straightforward. It's giving me gray
No.
hairs. But usually it is in the issue. Usually, okay, so that sheet on page. What's making this a little bit less than what I'm used to reading, but in fairness, these are legal docs. They can be written however they're written. But usually on that page, was it 50, was it 16 or 13? Something? Sorry, on page 12, usually there's a line item that says done at this price.
Yeah.
And then it says something like due on this date, or actually length of or term, the duration or the term or whatever. And it's not clarified on that page 12. That's what's making it. It may be somewhere in the document because it's still kind of like there's a concept for when it would be due, like at the end of a certain quarter, given a certain set of circumstances, if not extended this way. Now, the weird thing that also is part of the reason why I'm saying it's not, there's no normal when it comes to bespoke forward contracts, is that clearly this was done for a specific reason. And when they negotiated it out, there were some thoughts associated with what they wanted the terms to be. And they may have these terms may have been, instead of based on a specific date, like 6 months, but they may have been based on like some sort of financing transaction happening, or some sort of this happening, or some sort of that happening. And so that's why it's a little bit not straightforward. The other thing to know about forward contracts is that because it's between two parties, if they decide to change the terms, they can, because, all finance really is a legal contract. And unlike something that trades on the exchange where there's not a lot of changing that can happen after it's on the exchange, something like this, you could call Goldman Sachs and be like, blah, 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 blah. And if they're like, I love the way that sounds, I totally agree, they could change it tomorrow if they wanted to. So that's something just to consider about why you do it this way.
The other thing, May, there was some wording in here. I don't know if you came across it, but it was saying with the allowance for convertibles and the allowance for shares reserved for executive compensation and this new offering, it said basically the company has 1 million free shares left.
Yeah.
Did you run across that?
I saw something like that, but then also there's the preferreds that still we all know can be done in some crazy way. So there's a few different.
I just wanted to touch on that. And I don't want to derail the forward contract, discussion, but I do want you guys to go do your own DD, read the risk factors in this prospectus. If you're planning on holding the stock, make sure you understand what the company's telling you. They are running out of shares. They're saying, we have a risk if we ask shareholders to approve more, that they might not approve it. That's a risk. They say we might have to, if shareholders don't approve more shares, we might have to go take more debt and we don't have any assurance we can get more debt. They're saying in here, there could be dilution from preferred shares, which might be something they consider if shareholders stymie them again. You know, the company is going to do what the company needs to do to stay alive,
Yeah.
to not go into bankruptcy. This is not a company fighting to go bankrupt. This is a company fighting to stay alive. And I want you guys to understand that. And I want you to understand they're going to do whatever they need to do for everybody's long-term interest. In the short term, you might not like it. In the short term, it might be painful. So you got to decide how that affects you, and whether or not you want to be invested in the company. Not my job to tell you what to do. I will urge you to read all the risk factors and make sure you're accounting for them as you decide whatever you want to do.
Yeah, I know it's interesting because some folks are saying like the timing is bad, what have you. It's a question mark because I do think that if they're renegotiating the debt at the same time, it probably makes sense for them to go ahead and show cards on what they've got on the equity side, or you know what I mean, as far as cash goes. So it's kind of a question mark. Also, since we don't yet know what they're doing additionally on the debt side, it's hard to know if this is just one in a series of a package of things that they were trying to do through the year end. Because the thing that's so interesting with the debt is that depending on when you owned it, it's either a loss or a gain. If you bought it randomly last year after the class action got resolved, then it's a massive gain. And if you had it from initiation, it's a loss.
Right.
And interestingly, if you're a high yield debt manager and you owned it through the entire period of time, it would look cosmetically like a gain for your year end filing of how did we do this year, but it still might be able to help you with tax loss selling. So there are some intriguing things that happen as a result. You had some of that last year as well. So it's just something to take note of, and to why like AMC is also a candidate for year-end debt-related refi, essentially.
So what you're saying in more plain language is some more debt announcements, like restructuring type announcements, debt for equity swaps, might not surprise you.
Or just they get to pay down a slug altogether so someone can get it done by the end of the year.
Okay.
Either one. I mean, if you think about it, at this point, they're going to make press releases for, hopefully, to clarify all this. Please, IR, we do not understand it. So please write a press release for make our lives easier going into the holidays. And
Lewis says, here's a question for you. Lewis says, why not just let the stock run up and sell into the run up at higher prices?
I mean, it really depends on whether you can take that risk.
That's how I would answer the question as well. I mean, what assurance does AMC have that the price is going to run up?
And this forward agreement does allow for them to work it out with Goldman. Goldman owns it now.
I know you guys are convinced that it's going to go to the moon or to 566 or $6. The management of the company is not rolling the dice and speculating on a short squeeze. They're taking the safe layup play. They're always going to take the play that is the most risk-free for the company. And as I've been explaining in my Discord, May, I don't know what you think. Here's been my whole thesis for the last 3 weeks. We don't know how this quarter is going to end yet. We're only at $1.5 billion, so 3 weeks to go. Let's say it ends up at $2.3 billion. That's going to be a massive loss for Q4. Q1 looks weak to me right now. Another loss. That's why I'm telling my Discord, they're going to raise money. They're going to take the safe layup and make sure no matter what happens over the next 18 weeks that they have enough cash to get into the rest of 2025, which we anticipate will be better. But they can't risk running their cash down. They can't.
I'd also just remind people that a run up with 50 million shares that you're trying to get out is not necessarily the easiest thing to try to sell into. So just remember that the retail investor on a run up benefits from lack of liquidity, but an issuer will not benefit from a lack of liquidity. So, I mean, unless you've got enough people that are trying to cover in massive size at higher prices, it's kind of a wash. And we did see that a bit when they did do those $8 sales from last year or something like that, where you got a little bit of the jump, but not all of it.
Yeah. I am going to keep just preaching to you guys. When you're trying to figure out what a company is going to do, think like a CFO. Don't think like a retail investor wanting a short squeeze, because you're going to be wrong every time. If they need cash, they're going to get cash. If they are worried about liquidity, they're going to get cash. The timing may or may not be inconvenient. Might be when the price is low. It might be when the price is high. It's more about they're running a liquidity forecast against box office expectations. And I did the same thing. And I was like, they're going to freaking raise cash. I did the same thing in March, and I got it out of this play one day before the dilution, because I'm just trying to think like the CFO.
I mean, the challenge too is that if you know they're going to do something like this, it kind of stops any run up for happening. I mean, it wouldn't be so surprising if the run up happens next week now that this has been done. You know what I mean?
Yeah, I mean,
It's not like that hasn't happened before.
There still could be a run up if box office is really, really good for the rest of this year. But I don't think that they're sitting there looking at the price saying it's going to run up. We better hurry up and dilute to help the shorts.
Yeah, I mean, my point is that
that's not the talk in the boardroom, in my opinion. They're sitting there, the CFOs presenting the liquidity bridge for the next 2 years, and they're showing where the gaps are and what holes do we need to fill. Q4 is at risk. Q1's at risk. We need to raise money right now.
Well, I mean, my nuance is only that the fact that everyone knows that they got to raise it makes it hard for it to run up. You know what I mean?
That too.
So it's not really so much about they're waiting for a run up or they could wait for a run up. You've got too many people that are trying to front run them when they try to do that.
That's why I said before December 15th, because once you're in the excitement of the box office right now, the closer we get to the end of this year, you guys are going to start seeing news about how awful Q1 is. They don't want to be trying to raise money then, because it's already too late. The price is going to be under pressure. That's my thought.
Yeah. I mean, let's just see how it ends up the year. I'd like to see that interest expense come down a lot before they enter 2025 in its entirety. Do we have any of these? I noticed like there's a lot of questions. Should we scroll through some of these and see what's going on?
Yeah. Let me put up the chat here.
There's just so many questions.
Vic says, Tony, Craven, Lord of the Rings, Sonic 3, Lion King. Meanwhile, Moana 2, Gladiator just came out. Yeah, I mean, I'm factoring all that in, Vic. Believe me, I want this number to be a success. I went to go see Werewolves last night. I'm going to see as many movies as I can, just because I'd like to see the company and all of you guys succeed. That contributing to revenue is the number one thing you can do, honestly. But some of those movies come out very late in the quarter. So it's a race to the finish line for Q4. And hopefully Mufasa and Sonic do good, and that will help out Q1. But the rest of Q1's still a little bit light. I mean, we need $1 billion movies, several of them per quarter, for AMC to be profitable. So Teja had a question, May. Now that they don't have more shares to dilute, are you saying AMC runs once they announce dilution is complete? I'm not saying that.
I'm not saying that. I'm just saying that to the extent that folks know that they're trying to raise capital and the dilution was always a possibility, and not just a possibility, but was a probable way in which they would raise that capital, it would have been intriguing to see it somehow have a run up given that circumstance. Now that they've done the dilution, at this point, it's hard to know what the next steps will be. Because you got to think, especially most of the ways that you would run the dilution without having a massive plummet in the stock like what we saw when the stock was, coming straight off of different dilutive periods. I mean, this stock has been down 40% off of dilution before, right? This is a little 10% today. We'll see where it settles out. But some of the ways that it can be done do require that the other party, if you're going to do it in one chunk, hedge on the other side. So, for example, you've had about 25 million shares trade this morning. This is a 50 million share offering. Goldman doesn't have to hedge all of it at once, given that, we know a little better if they'd include an expiration date on there. But they're also not going to short the stock below where it makes any sense either, because they don't need to. They're basically trying to hedge out the risk of being long the stock. And if they did 20 this morning, they can calm down for a bit and see what happens.
Joseph says, with all the good movies and record attendance, they are short cash. I mean, Joseph, I'm just going to be blunt with you, and you can look at the box office numbers. The first 6 weeks of this quarter were very light. Thanksgiving weekend was phenomenal, but I don't care what anybody tweets or what headlines happen about 1 week records. I only care about what is the end of quarter box office. Right now, Joseph, we're at 1.5 billion. This company is not going to be profitable without a number that ends at least close to 2.7.
Well, the year was light too, so they're making up for different parts of the year.
I'm just talking this quarter, this quarter profitability. You still got $1 billion to go, Joseph, in 3 weeks. If you think that can happen, they got a chance at break even or profitability. Yes. I can't tell you with certainty. And I think AMC is going to take the more safer approach. Like, if we run a risk of being short on cash this quarter, almost certainly short in Q1, raise cash now. So I want you guys, when you see announcements about, oh, we had the highest Monday ever popcorn sales in the history of the company. So what? Did that make the quarter? That's all you need to ask. What is the quarterly number? It's fun to have records. I love to see it too, but you as an investor need to think in, where are we at for the quarter? Are we going to meet the finish line for the quarter?
On the cash flow side too, guys, is really what we're talking about. Like, how profitable was it? So he needs to fill seats, and they need to eat a lot of popcorn, or maybe AMC, the snacks. Those are yummy.
Nick says, what about upgrading seats, lighting?
Guys.
May, do you want to talk about the CapEx use of this money?
Yeah, it does say in there that they're going to do it for AMC Go. And really, I think he talked about it on the quarter probably better than I can, which is that, the large format screen does actually make more money per seat than the regular seats. And so you got to kind of, like, in this, you have to kind of think about it. If you know that one type of theater can get you cash flow positive faster, but you still have to spend the money to get there, then there is that. Realizing that they've done sub 250 in capital expenditures for at least a year and a half now. That's really low.
And with Cinemark increasing their CapEx, AMC is probably feeling some pressure to keep up. On the leases they want to keep.
The theaters can't be gross, guys. No one likes a gross theater, even though it's dark in there. We all know if it's gross. Okay.
Yeah, Matt's bringing up the lawsuit risk. That lawsuit is still out there from the debtors. It's in the risk factors for this prospectus, so make sure you go read that. Some pretty scary stuff. I'm hopeful that AMC and the lenders work that out, because when I read that, it scares the crap out of me. But I have faith that everybody wants the company not to go bankrupt.
I think so too.
They don't want to accelerate the loans and force the company into bankruptcy. I think everybody is rational. They each have their sides, their perspective, but they want to work on a solution. And I think that they will work it out. Can I guarantee that? I can't.
Yeah.
Tech We Love says, was AMC not in a strong enough position to do an offering of this style in the past?
They have been all along, to
Yeah,
be
I mean,
fair.
they ran out of shares, and then they created Ape, and then Ape got decimated because everybody sold it, and then they got tied up in a lawsuit, and they didn't have shares for, what was it, almost a year.
Yeah. You
So
can kind of think of
since
it this
since
way
the
too.
conversion and the reverse split, they've been doing consistent offerings.
And you can kind of think of it this way too. If there's not that many shares remaining, then you can get a lot more gamesmanship on how the stock price plays. Like if they'd done it in an at the money offering constantly, and someone was just, let's call it mean, which there are a lot of mean people out there as relates to this particular stock, they could try to force it down to $2 and then you just run out of shares at that point. So a forward contract probably was the right way to do it. If that helps.
What other questions you guys got about the forward contract? That's what we're trying to
Multi's
talk
one of
about.
the mean people. Look at that. Why are you being mean like that, Multi-Lago?
He's probably short, May.
Remember, there's people out there that work for this company. There's, so it's not a good thing when a company goes bankrupt of this size. What else do we got?
Plus anybody who is holding May is going to get wiped to zero in a bankruptcy. So
Yeah.
it's not a good outcome for a lot of people. I don't think AMC would go away if they went bankrupt. It'd be handed over to the lenders. They'd run it privately. They'd close a bunch of leases. They'd use the bankruptcy to close any non-performing locations, and it would reemerge a little bit smaller, a little bit less debt-free, but completely owned by the lenders until they get the book straight and then relaunch it again publicly a few years from now. But that's not going to help anybody that's holding the stock.
I mean, it also doesn't help the people that work there, to be honest. It's you don't want private equity owning your company and trying to, because all they care about is cutting costs and closing down theaters.
Yeah.
Let's see. I don't actually think that they're going to go bankrupt yet at this point. I still think they've got more than a better than average shot. But, I'm also bullish this economy right now. Other people are not. So if you think we're going to go into a severe recession of some sort, then maybe. But if the economy starts to pick up such that people want to be continuing to re-up their entertainment budget, there's no reason why AMC shouldn't do well.
Howard says, does the prospectus describe the par value for the shares, or are they at the market? Par value is just an accounting term. I think it's a penny or so for AMC. If you're asking, does it describe the share offering price on this offering? It is an ATM and a combo forward contract. So at the market just means they're going to sell them, whatever price they can get, the prevailing price of the day. And then the forward contract, we're still reading through the documents to see if they said what the forward contract price was, but I don't think May or I have found it yet.
I didn't see it. I did see some language around the VWAP, but I didn't see dates around it.
It'll be close to the current price, wouldn't you say, May?
Yeah, I mean, it'll be 520 probably on the high side, which was in the document, and then whatever's on the other end of that.
May, any concerns about dark pools related to this offering?
I mean, I don't have the same feeling that everybody else has on the dark pools as far as that goes.
I'm already seeing the conspiracy nut jobs. Oh, they're handing 50 million shares to Goldman to go sell in the dark pool.
Anya has a good point
calm
there.
the F down.
Anya has a good point there as far as it's really not to the benefit of the real estate as well. So the real estate, I think it helps a little bit for them because it allows them to renegotiate their leases, or at least not have the same kind of reaction that you would typically have from your landlord if there was any kind of lease situation. Because, it's a foot traffic thing for any, mall. You don't want the movie theater on one side bankrupt and not having foot traffic coming from that to the stores that are near it. It just looks bad. And also sometimes you get vagrancy on that side of the building.
We have our favorite bear in the chat, May, owning the float. Told you dilution was coming. We've been warning people for many, many weeks. OTF, that dilution is coming. A lot of people are like this and they don't want to listen, but all the clues were there. So yeah, I mean,
Gotta
you
let the
were right.
Bears have
You
a
were
couple
right. I was
days every
right.
now and then.
Anybody who's looking at the financials and the box office could tell that dilution was coming. As far as his other comment about bankruptcy, I mean, the bankruptcy thesis on AMC is, in my view, may dependent
Pushed
on
out.
two things. It's pushed out because the debt got pushed out, but there's really two things that I'm looking at. What is the long-term box office forecast? Can the company get profitable enough to cover their debt service and, maybe get some positive cash flow? So box office, and in the event that the box office is not high enough for them to be cash flow positive, do they have cash raising ability? Right? If you same thing I said, about the lawsuit a year and a half ago. If you shut off this company's ability to raise money, that is what these shorts want.
Mm-hmm. It's true.
They would love for AMC to have no ability to raise cash. It'd go bankrupt, just like Metamaterials. Shareholders said nope, and then a couple of weeks later, the company filed bankruptcy because you shut off the faucet. Even though the faucet hurts, right? It's fucking hot water boiling if you're trying to hold through dilution. I get it. But if you shut the faucet off, they're done. It's toast. You're going to zero. So you got to look at the cash, you got to look at the box office, and you got to look in your heart and say, do I want to take this risk? Do I want to ride with Adam Aaron, or do I want to maybe find a different play? I don't care what y'all do. I'm not telling you what to do, but I do know that if you shut off their ability to raise cash, they are toast. And so will you be.
Yeah, I mean, a lot of this is chicken and egg, right? So you can't raise, if people know you're trying to raise capital through dilution, they're not going to run the stock. And then if you raise capital through dilution, then
Everybody
it's
gets diluted.
yeah, everybody gets
It's a
there's
very
not a great way. Let the company, this is a high yield name for a reason. This is a high risk name for sure. No one is trying to play like that's not what's happening
This
here.
is a speculative play.
This is a
I said in
play.
January, of this year, for me, this is a swing trade only year because
This company needs to get through its debt, and it's always ugly. I mean, you think about when individuals have to get through their debt, it's never a pretty time. So they're going to go through this ugly time. And if, God willing, and this box office comes in, from second quarter to fourth quarter, much more attractively than what we're thinking is going to happen the first quarter.
next year.
Yeah.
Yeah.
If you get any kind of upside next year, fabulous. But this was going to be a couple of years getting through. I mean, think of it this way, though. We thought, or we were concerned all last year, by we, I mean, pretty much anyone that owned the stock or even owned the debt, that the bonds were still question mark, right? And then it was which of the bonds, 2025 fine, 2026 question mark. And then now 2026 is not a question mark anymore. Even the bondholders admit that it's not a question mark. And that is despite the lawsuits. And the 2027s are still trading actually pretty good.
Yeah,
so,
I would say to anybody who's in the comments saying this company is going bankrupt, go look at the bond prices. Like the bond market is not telling us that the bankruptcy risk is high.
Yeah.
I mean, you don't need to listen to me. You don't need to listen to May. Look at the bonds.
Yeah, the bonds are telling you you have 2 years of runway, even from here.
When they're trading at 80 to 100, close to par, that is the bond market telling you they're not worried about bankruptcy. You start seeing them nosedive down to 50 or 30 cents on the dollar, you should start getting worried. I mean, if you're paying attention to the financials, you'd be worried before that. You'll know when things are going south, but the industry is predicting a higher box office. The company has now 5 more years before its big chunk of debt is due. So the bankruptcy risk based on those two things is limited. And really, you just got to steer through profitability concerns for the next few quarters. That's how I view it.
ERA Land Beer, why do other companies have massive debt, Cinemark, and their share price is higher? Don't dilute the shareholders. I believe they did do some dilution, but they also came in with better financials. So they didn't have nearly the same debt load relative to cash flow. Both companies are approximately, I mean, Cinemark is maybe a touch more profitable. The bigger differentiation between Cinemark and AMC is where the theaters are located. The US is about the same, but you've got Latin American exposure versus Europe exposure. So Latin America has done slightly better than Europe, which we kind of know is a little bit of a hot mess right now in more than just theater space. I don't know if there's other stuff because you do a lot more Cinemark.
Yeah, I'm going to answer this just from a financial perspective, May. Cinemark has a lot of debt. AMC has a lot of debt. So the question going around on social media is, how could Cinemark possibly be trading at $34? Because their balance sheet's not upside down. You guys, do you know what insolvent means? Like when your liabilities on your balance sheet are more than your assets, you're functionally bankrupt. You're insolvent. That is AMC's balance sheet right now. They are working to
They gotta get that.
the debt.
They gotta get that flipped around. You got to get current assets lower than current liabilities.
I'm talking about if your liabilities are greater than your assets, or your current liabilities are greater. Did I say it wrong?
No, you said it right. But I mean, the biggest thing right now for them is to just get current assets greater than current liabilities, so that
the point is AMC's balance sheet is not in good shape compared to Cinemark, whether you're looking at current or total assets and liabilities. Their balance sheet is fine, even with debt on it.
Yeah.
Their income situation allows them to book profits. And if you multiply that times a PE ratio of 18, their expected next year profits, there's your $34 price. AMC does not have positive earnings. So I can't tell you. A negative times 18 is what? I can't tell you what the price of AMC should be because they don't have positive earnings. Cinemark is very easy to explain. AMC, you got to get positive earnings for the next 12 months, and then I can tell you a price target.
Yeah, I mean, I would just, because sometimes you can get really complicated balance sheets where there's no rule of thumb. I used to have rule of thumbs. Now I don't have a rule of thumb anymore because I've seen so many weird scenarios where the rule of thumb didn't make sense. But I would say one thing that is going to be really easy is you need cash flow. You need free cash flow to be positive when you have this much debt. And it is a different way of saying what Tony is saying, which is just if you look at operating cash flow and you subtract out that capital expenditure, that number is going to be, for this particular company, more important than anything, because it's going to tell you what they could then redeploy to additional debt, not just the interest payments that you have to make, but additional debt pay down. And it also will incorporate the fact that you have some bare minimum maintenance capex, some bare minimum, because you're still an operator of facilities, so it'll give you that bare minimum. What's it take to operate these facilities versus what are we taking in for money? The challenge with this offering is that they feel strongly that they need to upgrade to some extent, and they believe that those upgrades will bring in more cash flow for them to pay down the debt faster. I think they're right, because I think that's how it's proven out. And I think that's why on the last quarter, they did so many more divisions and slicing and dicing. I mean, they typically do that, but they talked more about the slicing and dicing of the large format theaters and how much more profitable they are versus the non-large format theaters.
But that kind of payout on this CapEx investment is not overnight, right? This is going to be quarters or years in the future. It stacks up, but still in the short term, it's you got to raise the cash and spend it and do the construction, swap out screens and chairs and lighting and projectors. This is a process. So as an investor, you need to understand the process and decide if you want to participate in it or not. Yeah, but my point, May, on Cinemark versus AMC, guys, it's apples and oranges. If you look at the financial statements, stop looking just at debt, and that's your only. They have almost the same debt. They should be the same price. It's a lot more complicated than that, but it's also very simple to figure out if you learn how to do a valuation analysis. And the easiest way to do that is just start with forward positive earnings times a industry PE ratio. Same blueprint I give you for GameStop of why GameStop is overvalued. What is their forward earnings projection times the PE ratio of any company in specialty retail or electronics retail? If you can do that very basic analysis, you can understand how to value a company. And then you can expand your education on other things like May's talking about, cash flow, EV to EBITDA, and a bunch of other topics. But start with the basics and stop listening to people right now that are telling you this company is wildly undervalued. How is it wildly undervalued when they're not profitable and the balance sheet still needs work? Like, it's upside down. It's getting better. They've made a ton of progress over the last 3 years, but they're not there yet. And more movies helps. More income helps. Paying down the debt, even though they're diluting to do it, helps. Everything they're doing helps.
So we
But
got
it's
5
a
minutes.
process.
I probably have to go in about 5 minutes. Should we take? Are there any other questions that we?
What other questions y'all got? Give
Yeah.
May a good question to wrap up here.
I mean, it just seems like a lot of people feel like this stock would have run versus
GameStop's down today. I mean, it's
because
at 28 bucks.
the
GameStop's
final.
not running. Why would AMC run?
Yeah. I mean, it's like day trading can't be the way to do it because you got to get 50 million shares through the door. Like, you understand? I feel like people that think this thing would just magically run don't understand what it is to put 50 million shares through a retail investor base. It's not that straightforward. It happens occasionally. It definitely happened more than once on some of these meme stocks, but it's not it's not a given that that's going to happen.
One
I think
Stop says we're a year or two out from strong comeback. Right now seems like
we
a
aren't
cleanup.
cleanup mode.
I call it we're still in the repair stage. The
Yeah,
company's still in the repair stage, One Stop.
that's true. Anything else? I know some people are really upset, and it's the holidays.
I know, but the people that are upset are listening to people that are promising them MOAS tomorrow or trillions of synthetic shares or, vibrations or, any number of things. They're telling them that it's massively undervalued at $5. Again, based on what? Where is any analysis that anyone's given you that says it's massively undervalued? What are they looking at earnings? Do they ever talk to you about current earnings? No, they don't. They just throw out blanket statements and don't back it up. Use some common sense, back off from the emotional and the hype and the hopium and the conspiracies, all of them, and just focus on the black and white financials. Read the company's risk factors. Read what they're telling you they're going to do. Listen to what they say in the earnings calls and check out May's channel or mine from time to time. I want the company to succeed. I want you guys to succeed, but I'm not going to tell you it's time until I think that it's time.
Okay. Goldman and AMC have determined a share price. Stanley Urban.
It's an ATM, right, May?
Yeah, it's going to
ATM and
be.
forward contract.
It's going to use the VWAP of the dates. I didn't see the date specified, but they definitely agreed to a price before they put this out. It's just that the agreed price wasn't a specific price. It was whatever is that VWAP and then the period over which they agreed that the VWAP exists, which is, I didn't see it in the document, but I might not have read as carefully as I could have, given we were trying to get this out sooner than later. So have a look through at what the terms of how they were going to price it is, but that is a little bit missing. Let's see. Somebody asked if I would agree that they should be allowed to raise more capital. I don't know. This thing is scrolling really, really fast on it. You might have to scroll down.
May, let me ask you a question. Do you think the fact that they did a forward contract agreement is why it only fell to 470?
Yeah, I do actually. So,
because when I saw the ATM this morning, I was like, wow, 9% drop. That's actually not pretty. That's not very bad.
Given that there's 50 million, another 50 million shares. But there was a question on whether I would approve if they wanted to issue more shares. I think it's farther down. I don't know if you can down scroll on your side. I can on my side.
Yeah,
but,
I saw it.
I would actually, because I think the fact that he's so handcuffed in the number of shares that he can issue is part of why this thing hasn't MOASed, to be honest. If he was allowed to issue as many shares as he needed to get this debt paid down, Because remember, the interest expense is still, I think, right around $300 million a year. $300 million, a lot of $1 million to go back to shareholders to pay down other things, to literally pay anything, right? So if he was finally not handcuffed in the number of shares that he could issue, that would be lovely, quite frankly.
If
It's
he was
kind of like
not handcuffed on how many shares he could issue, it would be lovely for
it
the
would be
company.
dilution, but it would be $300 million back to
You,
shareholders.
you got to be careful what you say, May, because the popcorn project people are going to clip that and say, look, May wants massive dilution. She wants to tank your share price.
Well, Stifler
May's just
got it
saying the
wrong.
company needs money. It's up to you to decide whether or not you want to hold through that.
Look, I can't stop the Project Popcorn people, and I could care less what they have to say, because I only care that this company doesn't go bankrupt, right? Here's the thing, Stifler, I'm not sure where you're getting your information from, but most of that is stock. So he does not make 20 million a year. Please go back and review your information because it's incorrect.
Oh man, is he talking about the pay?
Yeah, delisting.
These people are idiots, man. Like, guys,
let's not call them idiots. There's a lot of misinformation. I'm trying to be nice.
I mean, the people that are pushing this on social media that people like Stifler listen to, like, wake up. The people you're listening to are idiots. The pay is in the filings. The CEO's salary is $1.5 million. He gets a couple million more on cash bonus. All that 25 million that these dummies tell you is their pay is shares, which align them with you to improve the company over the long term. As long as they're holding them, which they have been for the last several years, then they are aligned with you. If you see them selling tomorrow, next month, then yes, be worried. But no one's bringing in 25 million on their paycheck.
Yeah, it's the most
ridiculous. That is a lie. That
is
is
really
a fucking lie.
Because if anything, they lose more money because most of their income is through stock right at this point. So let's just ignore that part, but hopefully that inspires you to go take a look at it, because that is incorrect. I bet it doesn't help when people are stuck in the play. Okay, so what you'd actually, if he were not handcuffed in dilution, then if the stock ran, you could just have one long-term shelf offering and sell into it. The whole idea that some folks are saying, oh, why doesn't he just have a self offering and then they could run into, like, if the stock runs, then do it. He cannot do that. Okay. That's the whole point. The whole handcuffing does not allow him to do that. He has, because he only has 50 million shares. He has to do the best that he can. And when he runs out, he's done. And if the stock goes lower, he's really done. So all of this nonsense, this is cart, horse, chicken, egg, all of it wrong. Okay. I really know another way to say it. Okay. But if he just was able, like GameStop was able, because they did not have this ridiculous cap on the equity offering, to just rip the bandage off, then what he could do is 300 million comes back. 300 million can be used to buy back shares. Turns out, if you really look, for all y'all that are all about how he's paid 20 million and ignore the fact that it's all stock, realize that would be his best incentive, is to actually buy back the shares at some point, right? Not dividend, which everyone for some reason believes dividend somehow is the only way.
Because they think it's going to unveil trillions of synthetic shorts, May. Another fantasy pushed out by people you guys shouldn't be listening to.
It's stupid. A 1 cent dividend isn't going to mean a damn thing to a short, but you know what will? A massive stock buyback. That's what would actually do it. A massive stock buyback would do it. And $300 million is not a joke. Okay. So that's what we're talking about. Let's just get all of the information out in one soundbite for you so that you actually can review what I'm saying and how that works relative to the nonsense of the idea that a CEO being paid in stock somehow wants the stock to go down versus up. Okay. That's what I would say to all y'all folks. You know, I get it. It's not the straightforward thing. There's a lot to learn. So I'm going to be a little nicer than Tony and not use the word stupid. I had a really, I had this weekend where I decided to try to be a lot nicer on all my social
media. That is me being nice, May.
I know. It's very frustrating at times, but at the same time, I was like, I'm going to try to be
because I got to see it every day from the same idiots.
I know.
Adam Aaron, getting paid 25 million a year. What? Okay. Show me where he got a paycheck for $25 million. These people confuse compensation package with pay. I used to get paid in stock at the corporation I worked for. You know what my salary was? It was still my 6-figure salary. It didn't matter if I had $1 million in compensation from stock options, my salary, my income was not $1 million
Stifler
until I
Z28.
executed the options.
Yeah, let's just stick with these Stifler Z28. You can't have it both ways. They can't be long the forward and short the stock and somehow be the shorts. You have to pick one. They are probably neutral on their position because Goldman doesn't take directional positions on stuff like this. But that also is misinformed. But I do appreciate you feeling that way. And I understand if you are watching only one set of people talk, they would not be the candidate. The folks that are the candidates for short selling, those are going to be your algo traders, et cetera. Goldman is not going to be doing that because it would not make sense to do that.
Stifler sounds like he's more at home on the
Denial.
conspiracy.
Sir,
Hey,
you are just in denial. There's really no other way to say it.
If all that conspiracy nonsense if understanding all that has improved your portfolio over the last 3 years, keep on listening to it, buddy. If you want to actually learn how things work, maybe take a deep breath and try to listen. You guys are being conned by a bunch of conspiracy nut jobs out there telling you stuff like this.
You know,
if that's what you want to hear, then just don't listen to this channel.
Facts. They don't match my facts. And I'm happy to argue or articulate why I feel that way. Okay, what else? Let's see who else we have here. I'm trying to be so nice, Tony. I apologize. Let's see. There was one good question. Okay, the dark pool. Here's the thing with the dark pool, okay? If you can have a natural cross, the dark pool bypasses the brokers. So when you have a lot of natural crosses, you can see stuff happen on the dark pool. It really depends on what precisely you saw. But remember, if shares traded in one direction, they had to trade in the other direction as well. There's no such thing as a trade that only happens on one side. So I'll just remind you that.
All right, May. Thank you for your time. We're coming up on 1 hour.
All
I think
right.
we covered what a forward contract is. We answered a bunch
Hopefully
of questions
that helped.
from both lovers and haters alike.
There's a lot of haters.
Guys, as we have more time to read through these documents and find any other interesting nuggets, maybe we'll do another live stream on Sunday. If not, I'll put out a summary video when I've had more time to read through these. Woo!
I know it's really rough. They've been rough on you. I know.
No, they're always rough on me.
I'm so sorry.
It's tough being the fact-based channel, May. It's tough being the fact-based channel. May, thank you. Have a good weekend.
Yeah, I'll be flying back to New York, so I'll be warm only one more day, and then I'll be freezing my little tail off. So I hope they're nice. You guys are mean to Tony. Don't be mean to Tony, you guys. What's going on?
I'm only trying to help, but facts aren't popular these days. Have a good weekend, guys. Good luck in your trading.
Happy holidays. Bye, guys.
Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's